You've always heard that you should buy low and sell high, right? But how do you know when it's low and how do you know when it's high? In this video, I'm going to show you how to know when to buy and sell gold and stocks even. And following this simple strategy, you could have turned $200 into over 10 million. So stay tuned. All right, welcome back. So we are going to talk about how to know when to buy and when to sell. Yeah, we know, right? Buy low, sell high. But how do you know when it's low? How do you know when it's high? And I'm going to show you a really easy way to do that. So let's go ahead and jump into that. So the first thing, we're talking about gold and stocks. All right, so the first thing you have to understand is that gold is money and nothing else. All right, so this is what J.P. Morgan, the founder of J.P. Morgan Bank, he testified before Congress in 1912, and he said this. The saying, I believe, has gotten twisted around, and people think it says gold is money and everything else is credit. I believe that the truth is that he said gold is money and nothing else. Either way, gold is money. All right, gold represents something real, something valuable, real wealth. Money, currency, dollars, they're not wealth. They measure wealth. All right, so a lot of times the government thinks that they can just print more dollars. A lot of people also think that they can just print more dollars and that makes people more wealthy, but it's not true. Money does not create wealth. Money is not wealth. Money measures wealth. It's how much wealth you can buy. All right, so because the US dollar is the world's reserve currency, that means everything's priced in dollars. So gold's priced in dollars, oil's priced in dollars, etc. And so we also look at, well, how much are home prices? How much is food, right? Everything's priced in US dollars. And because of that, we don't see good feedback, all right? We need to look at how much things are compared to other real world things. So if we start to look at what are homes priced in gold, what are homes priced in oil, what are homes priced in cotton or copper or other things like that, we start to see a completely different picture. Money is not giving us a good feedback because money is not real wealth and we can't compare it. So we're going to look at gold and stocks today to figure out what is cheap and what is expensive. All right, so this is called a stock to gold ratio. All right, so this is the amount of gold versus the amount of stock, and we're going to do this instead of dollars, right? So we're going to use gold as our value, as our wealth, and then we'll look at stocks. All right, and we're going to specifically look at the Dow Jones stock versus gold, and it's going to show us when we should be buying stocks and when we should be selling stocks. And over the last 100 years, it's a big track record. Over the last 100 years, it's worked perfectly, regardless of what the US dollar has been doing. So let me explain. I'm going to go through these pretty quickly. So in January of 1918, right after J.P. Morgan testified before Congress, the Dow stock was about 76 points. Gold was $20 an ounce at that time. All right, so at that time, the Dow to gold ratio was 4. That means it would have taken about 4 ounces of gold to buy the entire Dow, okay, 4. So it's $20. So what we would do at that point is, let's say that in 1918, I sold 4 ounces of gold and I bought the Dow, I bought the stocks. So and at that time, we're looking at the ratio, the amount of the Dow to gold ratio. So how much gold it takes to buy the Dow. So at this point in 1918, it was at 4, all right? So anytime the Dow to gold ratio is below 5, meaning we could buy the whole Dow for less than 5 ounces of gold, we're gonna buy it, all right? So that's it. So right now, 1918, it's at 4, that's below 5. I take the 10 ounces of gold, I sell them for about $20.60. It gives me about $206. I take that $200 and I put it into stocks. All right, so I've sold 10 ounces of gold. I'll put the money into stocks, and then I wait until February of 1929. The Dow has gone up. It's now at 310 points. Gold is still the same. Gold's still at about $20 an ounce. But now the ratio is 15. That means it takes 15 ounces of gold to buy the whole Dow because the Dow has gone up. So what happens is now it's gotten expensive. At 15, it's too much. So I'm going to sell my stocks and I end up with $1,400, $1,400. I started with 2, now I have 14, and I take that 14, it's a return of $600, and I buy gold. And now instead of 10 ounces of gold, I have 71 ounces of gold, and it's still, like I said, at $20. Then fast forward to September of 1931, the Dow's come down, the market crashed, right? That's the stock market crash of 1929. 1931, the Dow's down to about 99 points. gold is still $20. Gold was always $20 until we got off the gold standard, but that's a whole other topic. So gold's still at $20. Now the Dow to gold ratio is 5 ounces of gold to buy the Dow. So at that point, since it's below 5, I'm going to sell the 71 ounces of gold that I'm holding for the 1,400 that I got before, because gold didn't change, and I'm going to buy the Dow. So I've sold the gold, taken the money, and I've bought the Dow. Fast forward 1958, the Dow is up to 530 points. Gold's gone up a little bit now. It's at $35 an ounce, and the Dow to gold ratio is now 15. Again, when it's at 15, that means 15 ounces of gold to buy the Dow. It's expensive, so I'm going to sell it. I'm selling my stocks. Now I pocket $31,000. That's a return of over 2,000%. And I take that $31,000 and I buy gold. I get 885 ounces of gold at $35 an ounce. Fast forward, 1974. Now the Dow's 839 points. Gold's gone all the way up. Remember, it stayed at 20, 20, 20. Right in the late 50s, 60s, it started going up to about 35, where it stayed at 35 until the gold window got broken in 1971, and it instantly skyrocketed as they started printing more money. So with just a couple years, 1974, the price of gold went from $35, where it had been $20, $30 forever, up to $169 an ounce, which brought the Dow gold ratio down, meaning 5 ounces of gold to buy the Dow. So what happened is, I'm going to sell my gold, the 885 ounces of gold, and now I have $150,000. I started with 2, then we got to 1,400, right? We've been working our way up, 30,000, now we're $150,000, and I put it into stocks. So I buy the stocks. Then in 1996, the Dow's gone up, gold's gone up, but now the Dow to gold ratio is 15. It takes 15 ounces of gold to buy the Dow. And so what do? I sell my stocks, and now I have $2.5 million. I started with 200, now I have $2.5 million. It's a return of over 1,600%. And I take that $2.5 million and I buy gold. I buy 6,700 ounces of gold. It's at $382 each. Now, I sit on it. Since 1996, I haven't done anything. Now, 1996 is a long time, so we've missed out on a bunch of big things. So, for example, in the early 2000s, we saw the stock market go up like crazy. We missed out on that. We also missed the bust of 2000. We missed the great financial crash of 2008. We missed the current bull market. We're in the longest bull market of stocks in history. We've missed out on all that. So because we've been sitting in gold since 1996, we've missed out on all those booms and we've missed out on the bust. But what happened? Well, if we look at this for comparison, so just before we see the results, for comparison, if I would have just bought the stocks in 1918 and not gone in and out of gold, and I just held the stocks, I would have had an annual return of about 10.4%. 10% a year on average over that time frame. And if I would just reinvest, I would have turned that a couple $100 into over $4 million. That's pretty good. It's amazing, actually. I mean, of course, it's 100 years, but 100 years of reinvesting, $200 turned into 4.5 million, which is pretty good. If I would have just held the gold from 1918 till today, it would only be worth $15,000. So stock's done way better than gold, right? Because gold gone from $20 an ounce to $1,500 an ounce. So that's for comparison's sake if I would have done. But by knowing when to buy and sell stocks, by knowing when stocks were expensive and knowing when stocks were cheap, not using dollars, but using gold, we were able to maximize our returns. And instead of $4 million, we were able to turn it into over $10 million. That's right, $200 into over $10 million. So whenever the ratio is below 5 ounces of gold to buy the Dow, we buy the stocks. Whenever the stocks get expensive, meaning that now it costs 15 ounces of gold to buy the Dow, we sell. That's it, right? Super simple. By using that strategy, it tells us when stocks are overbought or oversold. Dollars is not communicating to us to that. We need to use gold, and it's that simple. Hopefully, you can take this advice and benefit from it. Where are we going to go today is probably the question that you're asking yourself. If you look at the chart that I have here on the screen, you can see that currently where we're at is pretty high, right? The prices of the Dow to gold ratio is pretty high. It's not the highest it's ever been. Now, we could continue to see that go a lot higher. And if you go back and look at those charts, if you want to rewind this video, you'll notice that we weren't always getting out at the exact peak and the exact bottom. So there's no strategy in the world, and no matter what anybody tells you, that can pick absolute tops and bottoms. We don't know that it was the top and bottom until we look backwards. And so, like Warren Buffett said, buy when others are fearful, sell when others are greedy, buy low, sell high. So we just have to develop what is low and high. And so even though we are selling at 5 and buying at 15, or I'm sorry, vice versa, I'm selling at 15, buying at 5, it wasn't the tops and bottoms of the market. So again, today, are we at the top of the market? No, we're definitely not. We won't know that until we look backwards. But as Rothschild said, I think it was Mayer Rothschild famously quoted, how did you keep money in your family for this long? He said, I always got out a little bit early. Now, I think there's a lot more room for the stock market to run. I think there's time to stay in it, but just be careful. Know that the tides are turning. It is definitely getting overbought and things are expensive. What do you think about that? Give me a thumbs up if you like that. Give me a thumbs down if you don't. Either way, let me know. And comment down below and let me know what you think about the Dow to gold ratio. Have you heard of it before? Is it something that you'll want to use? Give me your questions. I love to answer them all. And that's it. To your success. I'm out.